So, greetings
And salutations.
and welcome to this episode of Fem Finance.
So today is going to be a little bit different in our format. So Miss Shirley is going to take the wheel and give us a closer look, a more microscopic look of the anatomy of candlesticks charts.
Yes,
Okay.
candlestick charts.
All right. So, charting in general and everything we could want to know about trading and trading view, looking at those charts, the time frame for trading using charts, and buying and selling signals using charting.
Right, using technical analysis.
Yes. So, we're all about charts today in this episode.
Hi, everybody. I'm back. So now we're taking a look at the Bitcoin USD chart inside of TradingView. TradingView is a web application that allows you to view charts of different assets. It has crypto charts, it has stock charts, it has indexes. Um, so the way that you get to different charts is up here. And you can see it has stocks, it has futures, forex, crypto, bonds, indices, economy, all kinds of stuff. Good stuff. So as we can see here, this is the Bitcoin USD 1 month chart at Gemini. Gemini is a crypto exchange that allows onboarding, which means that you can, and an exit ramp, which means that you can provide them with US dollars to buy crypto as opposed to crypto to crypto exchange, which um, takes only crypto. So, at looking at this Bitcoin USD chart, um, I'll show you. Let's talk a little bit more about TradingView. Um, I am going to leave an affiliate link to TradingView in the description of this. TradingView has it has a free option as well as other paid options where you can save more charts and have access to some of their other features. I personally have a paid account, but I purchased my pay account during the holidays because they have an awesome Black Friday sale that's like 60% off. And I highly recommend that if you are looking or even thinking about getting a subscription, to wait until then. I think they have another one around Christmas or New Year's, but I always get down with the Black Friday event. So let's take a look at. I'm going to go over a little bit of how I, what I do to my charts straight off. So I put in um, boundaries. I mark the boundaries on my chart, the highs, all time highs, and all time lows. That's typically how I roll. And then I put in some trend lines. And trend lines are just lines that are very subjective, that give you some type of, they set up boundaries of price action. And so with this, I mean, this trend line is very low, so and this is a 1 month chart. Typically, um, when looking for trades, I'm trading in a much smaller time frame, because I'm looking at swing trades or day trades or intraday trades, I use a smaller time frame. So let's uh, go ahead and do that. With TradingView, I can break this out into multiple charts here. And then I can designate each chart as a different time frame. So this is my monthly chart, and this is my weekly chart. This is my daily chart. And then this is going to be my 8-hour chart. Okay. So this is all looking at the same chart data, but at different levels of definition. All right. So as we can see from the monthly chart, we are definitely in a downtrend. And that's the other thing about trend lines, is they um, help you determine the trend. Okay. So let's blow this up. Let's blow this up. Boom. Okay. Now I can also sync these lines across layouts. So I'm going to sync this across layout. Now I am going to move to the weekly chart where we have this, and then let's kind of move it so that it's better. There we go. All right. So for me to feel like I'm that this is it has a when they talk about price breakout, here a price breakout would be if these candlesticks closed on the upside of this trend line. Now let's take a look at these candlesticks. Each one of these little markers here is what's called a candlestick. And you have green ones and you have red ones. The green ones are bullish candlesticks and the red ones are bearish candlesticks. And how are they determined whether or not they're green or red? Well, it all let's look at the anatomy of the candlesticks. Candlesticks have an open, a high, a low, and a close. And all of that information is seen up here in this right here. But when you hover over a candlestick, all right, we can see that this particular candlestick opened at $31,791. And then its high was $35,448 and some cents. And its low was at $29,286. And then it closed at $35,442. So if you can see here, this particular candlestick, it opened here, it went up to here, all the way down to here, but it closed here. So the close is higher than the open, so therefore it's green. The same would be the case here with this candlestick, where it opens at 35,431. Its closes at 39,000, which is up here. You know, the highs are here, and the lows are down there. So that's a bullish candlestick. Whereas the red candlesticks, like this one, the close is lower than the open. That's how you define a open candlestick, a bullish candlestick versus a bearish candlestick. All right. So for me to consider the price is breaking out of this on this weekly chart, then I would want to have a candlestick close above this trend line. And like I said, trend lines are very subjective. So that's just the way that I'm looking at it right now. Okay, so then you have let's take a look at the daily chart. All right, so this is the daily chart. So this is what's called a head and shoulders formation right here. You got your left shoulder, you got your head, you got your right shoulder over here. And when this right shoulder, neck crease right here is lower than the one over here, it typically means that this that there's gonna be a continuation of the downward trend. Usually, somewhere along the same amount of length between the head to the bottom to the crease there. I've seen some people uh, do. So it looks like it's completed that formation. But then right here we have like a smaller version of it right here. So let's take a closer look here. Yeah, once again, more bearish head and shoulders formations here. So I predict this to go further down. So this is just using, and another reason, another thing to look at here is that if, like, say here, if I were to draw, there, I draw a trend line here to here, like this was looking pretty positive, it was going up, it was going up, it was going up, and then it broke the trend line. So that's an indication that it would continue to further go down. Along with the creation of this bearish head and shoulders pattern. All right, so in um, in addition to trend lines, we have other indicators. I like to use the Bollinger Band indicator, and with the Bollinger Band, well, I like to use several different indicators. There's a simple moving average, and um, and the Bollinger Bands. So let's go ahead and put some indicators on this chart. All right. And then we'll just take this one. Okay. Whoa, no, maybe not. That was not the one I was looking for. Oh, yeah. Yeah. No. Okay, so let's take a look at these Bollinger Bands here. So you can see it draws this line here. This orange line is, let's look at the properties so I can tell you exactly what's going on here. Okay. So this is a simple moving, the orange line is a simple moving average um, of at 20. So it goes back 20 um, candlesticks, and it looks, for it gets the data for this simple moving average, and it tracks it as a line. And then what these blue lines are the standard deviation plus or minus that. And I like to use this indicator because it helps you to see when things are outside of the standard deviation. And once, typically, when things go outside of the standard deviation, then it's time for a correction. Because you can see here, we exited outside of the standard deviation here, and then the trend changed, and it started moving down. Um, Here, we went outside of the standard deviation on the low side, and then it went back in. So typically, the price generally tries to go within the standard deviation. It works within the standard deviation. All right, let's go a little bit further into the 8 hour chart. Look at the 8 hour chart, which once again, like I was saying, it has more of the same, um, but at a more definition. So you can see that there are you have lower lows, and then you're not making it's the trend is definitely still down. Now, another indicator is pivot points. So I'm going to go ahead and put on my standard template for crypto, my standard crypto tip, and it has like the pivots, the pivot points. And if you look here, um, this is the 200-day moving average, and then this is the um, 100-day moving average, and then so here we have these pivot points. This is a yearly pivot point, this orange one, and then we have monthly pivot points, and then we have weekly pivot points as well. And these are points where price action has gone to historically. So historically, price action has hit these particular points. So a lot of people are saying, or I've seen that based off of why is this not closing in? Hold on. So I'm going back to 20. Okay. Goes back to 2017. Okay. Okay. So according to, if we look back here, the daily might be a little bit, well, you can see it here. Over here on this side of the chart, I was trying to make the chart smaller so that you can see where there is historical resistance and support. And there seems to be a lot of it around here, around 11,000, 10,000. And that's why a lot of people are saying that they see where Bitcoin could go as low as 10,000. And that's why, because previous resistance offers support on the way down, because it kept bouncing off, this level here. So that means that that level should provide support if it should drop further. Now there is no, I mean, there's support or former resistance around 100, so it could bounce there. But there's much more significant support around 10. So that's why if you keep hearing people talk about, we can see it hit 10,000, that's why. And that's basically the Bitcoin USD chart. If you have any questions, make sure that you ask me in the comments. I'll be more than happy to answer your questions. If it's questions about TradingView, about how to do something in TradingView, just let me know. And I look forward to hearing from you. Thanks for joining us today.
Absolutely.
And make sure that you like
And subscribe.
and hit the notification bell.
Yes, we want to bring forth more to you. Bye.
Bye.